I'm bullish because Bitcoin works, which people I think often forget or take for granted. So, for example, one of my banks is a Big Four bank that I use for international wire transfers and business banking and all that kind of boring stuff. Um, and like all day today, they've had wires offline because of some technical vendor issue. So just can't send wires. Just money's just stuck in this little controlled pocket. Whereas Bitcoin's still putting out blocks, still working. There's always drama around it, but it's still working. And I think that people forget about that. And I would say that as far as this whole kind of corporate centralization thing, none of that impedes Bitcoin from working.
The world is obsessed with price charts, ETF hype, and the scramble to regulate Bitcoin. But beneath the noise, something far more seismic is unfolding. A quiet revolution is separating Bitcoin's true believers from the crowd, and it's not about short-term gains. It's about a tectonic shift in global finance. While retail investors obsess over daily volatility, a new class of players, sovereign wealth funds, multinational corporations, and macro strategists are eyeing the bigger picture. Take Michael Saylor's MicroStrategy, for instance. While meme coin mania gripped retail traders, MicroStrategy quietly transformed into an $84 billion Bitcoin accumulation machine. Wall Street panicked, calling it corporate hubris and a ticking time bomb, but the company's bold move revealed a fundamental shift in how serious players view Bitcoin. The fallout is just beginning, but the writing is on the wall. Lyn Alden, a macro strategist trusted by hedge funds and Bitcoin veterans, sees this moment as the beginning of something much bigger. Bitcoin isn't about the drama, it's about unwavering resilience. While her corporate banking partners were sidelined by outages, Bitcoin kept moving, block by block, transaction after transaction, unaffected, with no single point of failure, no weak link. This is the foundation for what's next. The stage is set, and what we're witnessing now will undoubtedly spark the next explosive surge. It's no longer just a financial asset, it's the catalyst for a whole new wave of growth. Alden's message is clear. Hold on tight, the future is on the rise. We will now bring you clips from Lyn Alden's latest interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
So I actually like the call. So I'm going to disagree with at least most of the negative takes. Happy shareholder since August 2020 when they announced the Bitcoin plan. So the funny thing is I didn't love the initial 21 plan because I didn't like the even equity and debt proposition. That, in my view, was more debt than I would have preferred should they have issued it all. But I also pointed out in a tweet at the time that that's just an estimate because they can only issue as long as there's demand for it, especially the equity. And that's very easy to measure. If the premium's over NAV by a comfortable margin, it makes every sense in the world for them to issue more shares and buy more Bitcoin with it. And then the preferred, that's more of a complicated thing to measure, but basically bond market demand for it. And so when I went long MicroStrategy back when it was MicroStrategy, first they were buying Bitcoin, then they were issuing debt to buy Bitcoin. I was like, okay. Then when they were issuing like second and third rounds to buy Bitcoin, I was like, is this getting a little bit much maybe? But then when they started issuing equity to buy more Bitcoin, I was like, okay, that's actually de-risking it. That's improving like the asset stack compared to the debt levels at the cost of share dilution. But that makes sense as long as the premium to NAV is high. And so it is true in that one tweet that they have issued that they've not issued as much debt as they said they were planning to. They've issued more equity, and now they're talking about issuing more. I think they're going to continue to be equity heavy, which I understand that some shareholders don't like. I actually prefer that because I view that as the more conservative strategy. The only thing that would ever really concern me about their strategy if they have too much debt, that opens them up to say a 5-year window where Bitcoin performs poorly, and then they enter some sort of liquidation cycle or troubled refinancing cycle, which is still, I think they're terming that out pretty well. But I always err on the side of caution, so I tend to like the equity focused approach. And also, I would say that buyers have to be cautious. They have to be responsible because back when MicroStrategy was trading at 3.5 times NAV, everybody on Twitter was saying it can go higher and higher, it can go to 10 times NAV. Why not? Why not go to the moon, right? And people were buying into that. So no wonder that some of them are going to be sensitive to share dilution because they bought at a price that is not conservative. There's no official range for what it can reach, but you're taking on a lot of risk when you're buying it 3 or 3.5 times NAV. So far, what I've done with MicroStrategy is that, for the most part, I hold Bitcoin. In certain brokerage accounts, I'll hold MicroStrategy. And whenever it hits like 3 times NAV, I actually trim part of my position out. So I've actually removed a big chunk of my, more than my cost basis. Everything I'm playing with now is like house money. And I plan to keep letting it run. And if it ever enters these periods of euphoria, I tend to take a little bit of chips off the table. Whereas if it ever kind of comes back down, sometimes I add a little bit more. And I think that's an approach worth considering, or at least whenever it's at a high premium, just manage expectations. They're going to dilute you. Every time the premium's super high, the market is basically screaming for them to issue more equity and buy more Bitcoin with it. I would say they're different. I think Saylor's been trying to get others to do the strategy since like 2020. And it took a while for it to happen. Now it's happening. I think it's good that there should be one in every currency block. So if you're, like Metaplanet in Japan makes sense. Uh, it's basically a free lunch in any sort of like currency market where there's not one of these to go make one if it's legal. As far as multiple in the US doing it, there is a network effect advantage for being number one because you have way more liquidity. And like options markets are pretty challenging to get liquidity for because every single strike price and every single duration on the option is basically a different security. And so it's not just like one stock where there's a decent amount of liquidity. If you've got 20 different strike prices based on 10 different durations of what that option is, that's 100 different option contracts, and it's hard to get all of them to be liquid on anything other than like the biggest one. That same thing happens with ETFs. So for example, if you're the top, one or two in your ETF category, you're likely to have a liquid options market. Whereas if you're ETF number 5 in that category, your options market is going to look like a ghost town. So there's always going to be an advantage to the first mover, the largest, most liquid. So as I outlined before, I would be concerned if their debt levels got relatively high. It's hard to measure exactly how high too high is, but generally speaking, the more debt there is relative to their equity and their Bitcoin, the more of a chance that they could run into a bear market problem. Now they are terming that out pretty significantly, so they're doing calculations to basically say that Bitcoin would have to be in more than a 4-year bear market for them to run into serious trouble, where they'd either have potentially trouble refinancing their debt or having to sell Bitcoin in order to meet their obligations. But that is one of the negative scenarios that could happen is if they get over leveraged and Bitcoin enters a longer than normal bear market. Um, Other potential tail risks are hack risk. As far as I know, they diversify their custodians. I haven't kept up on all of their filings, so I don't know if that changed or if they moved that around. But I know historically they had 3 different custodians that they used. So forgive me if I'm not super up to date on what they're doing with that. And also tail risk of, it's a giant honeypot. If the U.S. government has a problem, they know where the Bitcoin is. Same thing for BlackRock. So Bitcoin IOUs are not the same as Bitcoin. So I think that I think they're doing the right strategy for them. Um, and I understand concerns that people have around concentration. But it's an open protocol. They're buying a lot. They said they're going to buy a lot. They are buying a lot. Others have had 16 years to stack. They still should be stacking other people. So I always like to see more diversified Bitcoin holdings wherever possible. But basically, I would say the most reasonable risk is just debt terms relative to the market cycle, which so far they've navigated, but it's always a risk. One thing I would
Um,
add real quick, because I see it in the chat, people talking about centralization. I would point out that GBTC had more Bitcoin at their peak than MicroStrategy has now.
Ooh.
So MicroStrategy has 500,000 and change, whatever the number is. Grayscale had comfortably over 600,000 at their peak before the ETF conversions allowed all the Bitcoin to drain and go to cheaper ETFs and places like that. And then if you go back really far, places like Mt. Gox, the percentage that were like trading on one exchange in the early days. So I would say people that are concerned here in 2025, if they weren't equally concerned in say early 2021, late 2020, just keep that in mind that there are these pockets of centralization that happened. Potentially a bigger issue is just how many coins are sitting at Coinbase because a lot of these entities all like use Coinbase for some or all of their of their custody. So you've think like a couple million coins at Coinbase. Um, that's potentially a bigger issue. Ideally, you want ETFs to hold it at different custodians, like Fidelity's doing. They're holding their own coins rather than all just being like an overlay on top of Coinbase. I would like to see more diversification there. So I do think that there are valid concerns around centralization, but this is by no means as centralized as Bitcoin has been, and in many ways far from it.
MicroStrategy's Bitcoin stash has surged to a staggering level, worth billions, and rewriting the rules of corporate finance. While most hedge funds flounder, MicroStrategy's Bitcoin gains have surged by 13.7% this year, outpacing traditional investments. They're not stopping there. MicroStrategy's new capital raise target has surged, doubling their original plan. What began as a software company has evolved into a Bitcoin juggernaut, using stock trades at a premium to fuel their relentless Bitcoin acquisition. Each premium stock trade prints free money for more Bitcoin, creating a cycle of growth that's as brutal as it is brilliant. The backlash came fast, with critics accusing them of shareholder dilution and Ponzi schemes. The stock offering, once planned over 3 years, is now being dumped quarterly. But Alden, the strategist behind it all, isn't fazed. She's leveraging Wall Street's obsession with fiat metrics to stockpile hard money. MicroStrategy isn't just making investments, they're waging a financial war. As other companies take notice, the corporate arms race for Bitcoin is heating up. This is more than strategy. It's the beginning of the Bitcoin standard. Let's watch more clips from the interview.
It's not even at the current time raising fees. I mean, that one of the concerns, obviously, when 10x more people want to use Bitcoin, there could be fee pressure on the main chain, which could elevate smaller users to higher layers of the network, which has trade-offs. But at the current time, you have kind of the perfect world, which is that there are these big pools of capital buying it, and yet it's a permissionless network. Anyone's free to use it. Um, I would like to see more people directly use it. I would like to see more retail buyers buy it and take self custody of it. I invest in businesses that try to make that possible and encourage it. So I always like to see more of that. But Bitcoin works. And I mean, if people are concerned around MicroStrategy buying or BlackRock buying or governments buying, basically what they're saying is that the weakness of Bitcoin from large entities, like the way that they want to kill Bitcoin is to buy it. Like if that's Bitcoin's weakness, if large entities buy it and that hurts it, then it was never meant to be.
Yeah.
I look at metrics like because it's proof of work, not proof of stake. I'm somewhat less concerned around ownership concentration. It still affects price potentially, but I'm more concerned around market functioning. So I look at things like miner centralization, miner supply chain centralization, mining pool centralization, um, things like that. Um, node distribution, stuff like that. Less around the custody aspect. And in addition, so a lot of people are also concerned around stable coins eating into Bitcoin's market share for payments. Um, which one, it's not taxable for the most part, so entities gravitate toward that, and you can't have like a single like FTX in the Bahamas blow up and then send the price around, affecting everyone's money. So part of the maturation process is that more entities buy it. That'll include small entities, big entities, potentially sovereign entities. Pretty much the whole stack is buying it. If it ends up being a global reserve asset and a global reserve money, it basically means everybody's going to own it in some way or another. Now, the path dependence still matters. The ideal, optimal, the utopian scenario is all the little people get in first, then the bigger people come in, and like nation states are last, right? You don't want you don't want like Apple to come out and buy, and become the biggest Bitcoin holder after they've already kind of played the fiat game really well for 3 decades. Yeah, I think that technological breakthroughs have very real impacts on power dynamics. And so, for example, and I this is like a core part of broken money, is that the invention and deployment of the telegraph made it so that information can now go at the speed of light while settlements were still speed of gold and verification and auditing. And so and if you could do information at the speed of light, you can do transactions at the speed of light, because transactions are just agreements to do something, IOUs basically. And so they opened up this gigantic mismatch between transaction speeds and settlement speeds. And the way to solve that was basically someone operates a ledger and reconciles them. And ledgers are prone to centralization and capture, so they coalesce into central banks. And we basically had a century and a half where humanity didn't know how to do fast settlement, and yet we had fast transactions, and that gave like a power dynamic shift to every country in the world. And Bitcoin is the invention of fast settlements. Um, but then, much like the telegraph was invented in 1830s, it wasn't deployed across the Atlantic Ocean until the 1860s. It wasn't deployed across the Pacific Ocean until the early 1900s. And then, of course, you build on top. There's radio, there's telephone, there's internet, more bandwidth involved than just the telegraph. And so Bitcoin is the invention of fast settlements, launched in 2009. Much like the telegraph, it takes time to it doesn't just exist and go to $100 trillion market cap and everybody uses it in year one. It takes decades to pierce into these massive network effects, massive systems over time. It gets tested in every possible way. And so, to the extent that it's successful, it's going to be a multi-decade process. And I think multiple tangible things can come from that. It takes away some of that centralization of power that speed of ledgers gave to central banks and governments. I think it pulls power back toward the periphery to some extent. It lets people demonetize things that they've been using for money and savings. Like, you don't have to like monetize your real estate anymore. People, when money's weak, they make everything else scarce into money. So by having scarce money, you can pull monetary premium out of all that other stuff or most of that other stuff, which makes it more affordable for the people that actually need it. It's good to have, excess savings in scarcity that's not tied to like necessary utility like shelter. And all of that is good. There are, I try not to do like utopian outlooks. There still are challenges. I mean, if we want to get cosmic with like great filter stuff, I can imagine a world where for $1 million, someone could engineer like a horrible virus. So you decentralize the power to do like a crazy offense, you know, or so there's. I think there's still gonna be fun filters to try to get through, and of course the pushback there, the social issue there will be, well, if everyone has the capacity to kill 1 million people, then the answer is like authoritarianism. That everybody has to be monitored to make sure they're not doing it, right? So that's gonna be a fun dynamic to navigate and be like, because they're gonna have this argument, like someone's gonna do it once, and then they're gonna be like, well, we have to monitor every single thing possible, right? And so there's gonna be pushback. Like there's a book called Upgrade where some like genetically modified attempt accidentally caused like a global famine. So now there's like authorities going out to make sure nobody's got like a gene modification thing in their garage because it's like so catastrophic that the offense you can do. Um, and I don't know how Bitcoin fixes that. I think that's it's gonna be fun to get to that point. I mean, we hope we get there and get past it. But Bitcoin has very tangible benefits for changing power structures, improving abundance, taking monetary premiums away from things that ideally shouldn't be scarce, um, and almost all of that is positive. I would echo what you said. I think that's a top tier answer. Probably the one that I would consider equal to it is default privacy, or basically privacy things becoming so easy that people just default to them rather than kind of like just a small percentage of people seeking them out, especially because privacy technologies are better the more people use them. They have that type of network effect. And so for whether it's Chalmy and eCash, whether it's other solutions, just multiple ways to kind of make it more private, I think is good because when privacy is rare, it's easier to target, and when privacy is ubiquitous, it's harder to target. And I think that part of that is changing people's minds. So, analogy I often make is that before banking, and when we were even a couple hundred years ago, no matter how much of a tyrant a king was, he couldn't think to surveil everyone's transactions. Just the technological reality wasn't there. And now we've got, as again, the speed mismatch issue. Now we all have bank accounts. We're all in this like shared ledger that's highly surveillable. People think it's weird if you want privacy. That's the default state is surveillance, and it's weird if you want privacy. And I would like technologies to get so good at just making privacy ubiquitous, almost like by accident. Like people don't even know they're private just because they're just using the best technology that happens to be private. Where it just becomes normal again. Privacy is normal.
Is this about stock dilution? Wake up. This is about proving that fiat accounting is obsolete. When every CFO starts valuing treasuries in Satoshis, the game's over. What happens when MicroStrategy's Bitcoin stack hits 1 million, 5 million? At current rates, they'll own 10% of all Bitcoin by 2030. We're not talking about corporate strategy anymore. We're talking about monetary sovereignty. The implications are staggering. A single company controlling more Bitcoin than most nations' gold reserves, a publicly traded entity becoming a de facto Bitcoin reserve bank, and the SEC is being forced to regulate what's effectively a Bitcoin derivative. According to Alden, this isn't just about alpha generation, it's about demonstrating Bitcoin's viability as a global reserve currency. Every Bitcoin MicroStrategy buys is a brick in the new financial system. The message is clear. MicroStrategy's $84 billion gambit isn't a corporate stunt. It's the opening salvo in the greatest monetary revolution since Bretton Woods. Like she said, Saylor's not just accumulating Bitcoin, he's exposing the absurdity of fiat accounting. When a software company can outmaneuver central banks using their rules, you know the system's broken. She also mentioned that people prefer the privacy that cryptocurrencies offer over fiat currency, and attributes this to one of the reasons Bitcoin is making waves. The question isn't whether this strategy works. It's whether traditional finance can survive what comes next. Agree? Or do you think Alden's missing something? Smash that like button, share your hot take in the comments, and subscribe for more unfiltered analysis. See you in our next video.